Being a business owner is one of the most effective ways to get rich. Most people have no idea just how ridiculously stacked the game is in your favor. My name is Grady Cool, CEO of Cool Wealth Management. Today I'm going to be explaining to you the 9 steps I use with business owners to help them build serious wealth and keep more of it. Step 1 is being clear about exactly what we're aiming for. Do you need the money this second? Or are you trying to build generational wealth? Are you taking more of a balanced approach? What do you aim to do with the money? These are just some of the questions that I might consider since it will greatly impact what are the best tools for the job. Once we have a goal in mind, we need the right structure for the job. By structure, I mean corporate structure. The government wants us to declare how we'll be filing ownership and reporting taxes.
Give me your money.
While we can make changes later, this will make a massive impact on how well we can avoid taxes and what tools we need to use in order to be able to protect our wealth down the road. As a basic rule of thumb, if you're just starting off, then the extra cost and the legal reporting requirements of an S corporation or C corporation might not be worth it quite yet since you don't have enough taxes to be able to offset it. But if you are starting to actually build something for yourself, meaning starting to earn maybe more than $100,000 a year, then an S corporation might be starting to be worth considering since you now will have some of the income taxes to be able to offset the cost of an S corporation. Step 3 is reinvesting in yourself. If you can increase your skill set and thus charge more per customer or find more customers, it's generally one of the most lucrative investments. In terms of business expenses, education is one of the highest returns on investment if done well. Although, be wary of the freakishly high number of fake gurus out there who have no shame charging you thousands of dollars for courses or coaching calls.
Hey, money please.
Besides investing in yourself, reinvesting in the business can be a massive benefit. This can be hiring and training employees, getting new technology systems, getting new software, or even just dumping a bunch of money into advertising. Your own private business is likely to grow significantly faster than any stock you could put your money into, unless you get ridiculously lucky and put your money into something like Apple or Nvidia before it blew up, almost like a lottery ticket. While this may seem fairly obvious on the surface level, any money that you use to spend on your business, you can usually deduct as some sort of expense, thus lowering your taxes for the year, which is a massive benefit on return on investment. Which leads me to my next point. Write off as much as you possibly can. Almost all of the money you spend on paper can be used to deduct as an expense in your business, thus lowering your profit for the year. That way you can lower your taxable income. Most business owners try to do this to an extent, but they don't realize just how much you can do with them. If you want more detailed info about the most impactful write-offs, check out my video here. Now that we've done what we can to maximize our revenue and minimize our taxes as a business, it's time to consider what exactly we can do with these profits to increase our returns as an individual while minimizing our taxes. The first thing to consider is retirement accounts. Retirement accounts are the government's favorite way of saying,
Please don't be broke when you're old, man. I'll give you a little bit of a break, man, but I don't want to take care of you when you're old and can't work, man.
The right retirement account depends on the size of your business, the number of employees, and where you are in the tax brackets. Generally speaking, if you can make use of a Roth IRA, wonderful. As an employer with no employees, solo 401ks have fantastic benefits. As a business owner with employees that are interested in making use of a retirement plan, then something simple like a SEP IRA might make sense if you're still small, whereas as you get a little bit larger, something like a safe harbor 401k plan may be worth starting to consider even though it is a little bit more expensive and a little bit more complicated. 401ks also have the added benefit of now having the option to do Roth contributions, which make it so you don't have to pay taxes in retirement, but you do lose some of the added benefit of lowering your income taxes in the current year. Generally speaking, the more you pay in terms of income taxes per year, the less Roth tends to make sense. With the right investment accounts selected, we can finally get down to choosing the right investments. I'm going to say this right off the bat. I don't think that stock picking is correct for 99% of you. When choosing investments, a well-diversified portfolio should be a given. The biggest ways to increase returns while minimizing risk include starting at an asset class level. That means stocks versus bonds versus real estate versus commodities, finding the right amount of each for what you're aiming for. Ensuring we have enough cash so that we can make through emergencies without concern. Having enough cash flow so that if there's a market downturn, we can sit through it for at least 2 years without needing to sell some of our other investments at poor timing. making use of debt to increase how much we can invest, usually in the form of a mortgage, while we invest into something else that grosses higher, like stocks. Using assets that include massive tax write-offs, namely in the form of real estate, but there are smaller ones through things like types of bonds. Last but not least, considering how much work needs to go into each investment to get the most out of it. Something like leveraged real estate may have incredible returns, but it can also be a lot of work where you might have been better off just working more hours at your business. When you use all of these techniques in the right situations, all of a sudden it doesn't become so complicated to be able to beat the market on an after-tax basis on a consistent basis. Even though we've increased our returns, it doesn't mean we're done. We still need to keep our wealth safe, namely through insurance and trusts. Most of you probably already have the basics covered of car insurance, health insurance, home insurance, etc. The bigger thing I'm talking about is having the right insurance as a business owner to prevent a situation where if you're sued, you lose everything. Or if you happen to get hurt or even pass away, having disability insurance or life insurance so that the business doesn't have to be sold with really poor timing on some sort of fire sale. I will say though, I'm not a huge fan of universal life or whole life. Insurance is most helpful while you're still working and have people dependent on you if something goes wrong. Once you have enough assets and cash built up, it's generally cheaper to self-insure. With trusts, they generally don't need to be complicated unless you personally have a pretty complicated family life or you have a very specific measure of control you're aiming for. Most people just need something to be able to avoid probate court. Unfortunately, building isn't really a set it and forget it type of thing. If you've done all the steps from this video so far, that is great. You're doing great. But there's likely to be some changes that come up in your life over the years, whether you're getting married, having a kid, moving across the country, making massive changes in your business. That's when some adaptations and being able to change the plan really does matter. Now, outside of that, it's mostly about staying consistent. At a high level, none of this really needs to be that complicated, but as you get further into the weeds and there becomes more nuance as you start to earn more money, then it can get a little bit more complicated. Make use of all of this video as best you can, and if you get stuck, definitely find some help. Other than that, I hope you guys enjoyed, and I will see you in the next one.